Hello friends, from Aditya Birla Sun Life AMC Limited, here is to wishing you and your family a wonderful new year. May 2024 grace your lives with positive energy, vibrant health and compounding wealth. Before we look ahead, let's quickly recap 2023 from the lens of equity markets. 2023 marked the 8th consecutive year of positive returns in Indian equities, a year with strong double-digit returns. Underneath the headlines of large-cap indices like BSE Sensex that delivered about 20% and 40 to 50% for mid and small-cap indices were 5 key trends worth pondering upon. 1. In a year of great macro volatility, of gyrating dollar index to the rise and fall in crude price to wars in 2 continents, the Indian macro held up very strong. In fact, if one were to plot the range of high and low for the year in macro indicators like the Indian rupee or the Indian 10-year bonds on a relative basis compared to global currencies and global bonds, Indian assets displayed one of the lowest relative volatility seen in the last decade. Remarkable indeed. 2. NSE 500 total return gave a total return of 24%. If one had missed out the best 10 trading days in 2023, these returns would have dropped to 11%. Clearly, time in the market is more important than timing the market. 3. Risk-taking in 2023 was rewarded very well. The number of stocks that outperformed NSE 500 total return from the top 500 companies by more than 10%, which is 10% alpha, was almost 50%. One of the highest readings that we've seen in the last 15 years. Similarly, over the last 3 years, almost 60 to 70% of sectoral indices have outperformed NSE 500 on an annual basis. Again, these have been one of the highest readings we've seen over the last decade. 4. Value continued to maintain its good run with strong performance in sectors like PSU, defense, railways and utilities. 5. Broadly, earnings of corporate India were strong. Investment theme performed much better than the consumption theme. Even as sales growth was a bit tepid, margins improved significantly as commodity prices softened significantly during the year. Against this backdrop, let's try to crystal ball gaze into the future. Market returns in the medium term are a function of 3 factors: earnings, sentiment, and liquidity. Over the last 3 years, earnings growth of the top 1,000 Indian companies have been very strong at 36% CAGR. Over a 3-year period, aggregate market cap of these 1,000 companies have moved up by 30%. Strong earnings growth came as firms benefited from taking market share from the unorganized segment, higher margins, as well as higher inflation helping improve the balance sheet profile of India Inc. Going forward, we think earnings growth to moderate to 13 to 15% over the next 2 to 3 years. This is still strong compared to the rest of the world. From a liquidity point of view, we have seen sustained participation by Indian households through their disciplined investment of SIP. Foreigners also joined the party last year with strong purchase of close to $20 billion. Promoters, private equity and venture capital funds were the large sellers during the year. We expect sustained interest by foreign institutional investors given that their extent of overweight in Indian equities has reduced significantly with time. Sentiment towards Indian equities has never been better. While elections in mid-2024 will impact near-term sentiment, India seems to be on the right side of many equations, be it geopolitics, demographics, digital initiatives helping improve productivity, along with significant number of companies with stellar management teams listed in India. However, one ponders with such good sentiment currently, at the margin, is there room for some moderation of sentiment in the future? Valuations in the context of such favorable sentiment therefore becomes very important to consider. In the near term, valuation, especially of large cap, are a mild premium to longer term averages. However, mid, small and micro segments of the markets are trading at a significant premium to longer term averages. We therefore do expect a slightly subdued 2024 compared to 2023 from Indian equities. Pockets of outperforming stocks and sectors are expected to be a lot lesser in 2023. From a style perspective, we expect a comeback in growth and quality at a reasonable price. Overall, equities are an avenue to help fulfill long-term goals. Strong foundation of reforms, a young population, strong balance sheet health of Indian corporates, and a prospect of competent management team makes for a compelling case to remain invested in Indian equities.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।